All right, guys, welcome to Tuesday, October 12th, pre-recorded Zoom. So basically, right, immediately following our call on Friday, right, based on DXY, we know where our medium-term target is, which was the solid green line that we mentioned, I believe it was last Zoom. However, right, we had acknowledged that we had seen a series of lower highs in terms of here and here, and a reversal could be anticipated if we were to reach this green line, right? However, transitions are everything here, so let's actually dive in deeper here in terms of, right, if we're aiming for this essentially liquidity point, right, I'm looking at a transition to the bearish side, which was essentially the new higher high, right? Obviously internally you have high, low, high, low, high, low, high, low, until this high here, this high per se is broken, and we have the reaction here, right, into, right, an unwillingness to break previous high created a bearish reaction, meaning we are now bearish, right? However, we have the preliminary structure break solidifying this low, right? So we have a pullback, unwillingness. So now it's technically no man's land in terms of here. No man's land, not an area I want to trade. Direction is not certain, right? So inevitably what happens, right, is because we shoot to the upside, it's not a matter of acknowledging what happens here in terms of the push to the upside. It's about acknowledging where this previous low occurred, right? So because this area had occurred via set POI here, and as you can see, there's even wick of interest there, because excuse me, because this reaction generated an internal higher high based on a POI. This signifies how, even though we have not solidified our bullish structure, this is solidified bullish order flow. Sorry about that. So this is our initial sign of optimism, our sign of strength, right? So because we come back into, right, the essentially a turbulence point which created that internal higher high, the reaction here confirms, right, the bullish momentum. So we have bullish continuation 1, and we should be seeing continuation probably for at least another couple days. I do see this being met now because the solidified low here is now technically unwillingness, right, based on, let me delete these. Right, so based on solidified points, solidified point here, up to here, solidified, right, well technically they're solidified, right, our solidified structural range, right, because internally we are bearish, right, this low is what generated the preliminary structure break, meaning we have a low, high, retracement, solidified low, continuation to the upside. Okay, so continuing with the bias via EU, right, very, very sloppy, right, but this is why I emphasize a more conservative bias at times, or a more conservative method of execution, right? So we had acknowledged, right, set POI, right, set POI caused a reaction, right? So, right, immediately after, you know, essentially the new week open, which was around here, right, we were anticipating, right, bearish continuation, right there. Let me actually highlight that. Right, we're anticipating a potential bearish continuation, but because we had one tap unwillingness internally, right, then we had two tap unwillingness internally. This then led, right, to a bullish move, which emphasizes bullish order flow, right? So now what is the meaning of the bullish order flow? What is the point? Why are we gathering this bullish order flow? Well, that is to acquire liquidity. We acquire liquidity, right? Meaning that because there is an internal bearish order flow an internal order flow disruption to the upside, right? That signifies that we are bullish, right? So if we dive in deeper, right, the only way we can invalidate, right, this bullish move to the upside is if the preliminary range is broken, which is exactly what happened here, right? So because, right, although we are now bullish because of order flow taking out previous high, because of how we reacted from the previous high, that dictates where we will follow next. So because, right, this high leads to a preliminary structure low, and deeper, this is now a liquidity grab, and it is not an external order flow disruption, because for one, we did not break the POI, and two, right, although we came to take the previous reaction's liquidity, that release of liquidity led to an even bigger move that even outperformed the previous reaction. So this is once again my sign of weakness, once again, right, my sign of optimism. So internally, right, we are we are now bearish. Let me take this out, right? Low, high, low, high, low, high, right? Low, high. So once we take that out, right, we now know that this is our confirmed range after that preliminary structure break, right? So because the narrative is bearish, because we know that the liquidity grab led to a bearish structural break leading into, you know, that said liquidity grab, right? We know that that is the bias, and until that is invalidated, right, I cannot, you know, look for a different type of idea until that is invalidated. So I believe it was M10. Nope, wrong time frame. Through M15, right? Although we have, you know, that bearish push to the upside, right? I acknowledge inefficiency fill there. Inefficiency fill, right? Because it took that bullish move to essentially give price that mitigation, right? I have to have that transition. If I do not have the transition, right, then I do not have a reason to risk, right? So right, I know we are bullish. Low, high, low, high, low. Right, potential liquidity grab unwillingness, depends on the broker, excuse me. And then we have a low, unwillingness, break of structure, scout break of structure, which is in harmony with that with the overall bearish liquidity grab that we had mentioned, that is now in alignment with this converting into a bearish move to the downside, right? So depending on how conservative you want to be about your entry, right, this wick of interest is fine, but I would probably have put this wick with my invalidation being at the internal structural range high, because this is what created the move to the downside. So I know that if we break that, I would then need, if we were to break this, then I now know that I'm now bullish, and then I would need another bearish transition in order to take more risk. Okay, so I acknowledge them transitions, and I know that my invalidation point is there. So there is a 1.5, potentially 3 pip stop, depending on how conservative you wish to be, and it is in session. So it all pretty much lines up for, you know, a solid trade to the downside. Right, and then that is pretty much leading into right now, which is about 40 pips up, and this has no reason to not meet previous liquidity point. Right, has no reason not to meet there, especially if we dive in deeper today. Right, I believe it was right when session started. Yeah, right when session started, we did have, you know, more continuation, because based on this, that created a new lower low of the structural range said. So you now have a high, low, and another retracement. Right, internally we have a low and another retracement, right, which I believe was M10. Yes, it was M10 inefficiency. Excuse me, M10 inefficiency over London session. Right, continued the bearish narrative. Right, internal structure break once again, low into high, break of structure. Right, internal mitigation of inefficiency there. So there is still tons of bearish order fill, bearish structure, all in alignment, right? And I don't see why we don't continue lower. Right, that gives us now to GU. Right, so remember what we said last week. Right, our POI, I would have wanted that to have been met, right, be essentially at the first high, because now the only way, because excuse me, let me start that over. Because now that we gave an internal bearish reaction, right, now that we're going up, me trading this POI is technically picking a high, so that's why I would need a transition, which is exactly what we got. Right, so meet the POI, right, the preliminary range is taken, right, as you can see. So we now study the structure. So high, low, high, low, high, low, high, low, high, unwillingness, break of structure. This break of structure is not a sign of bullishness. That is the continuation BOS, signifying that we now have a high to the low, bearish structure range because we took structure. So I now know where I am in the range, and we can zoom out for a POI, whether that be M15, M10, right? And you can easily see, right, in SC that pushed down. So I would include the entire wick as well, right? And this is where, you know, you can essentially enter in your own manner, and that is essentially the bearish reaction that we were looking for, the bearish transition, right, which was the high into a structural range low, break of structure, intermediate structure, immediate structure, which led into a pullback. Doesn't look like it's a premium. Well, actually it is borderline premium, and as you can see, that is what's generating this move here as well. So looking at this directionally, right, I don't see why we don't continue lower. It's very realistic to even anticipate 1.3432 over the next couple of days, unless we are unwilling to take out this previous low, or we give a liquidity grab based on this low. So it just really varies on the transitions. Now looking at AU, right, this is the weird one. I'm still, I want to say I'm still bearish in the long run, especially because I still think this high is a liquidity grab to the downside. So I just see this as being a potential pullback. So I still want to, you know, anticipate, you know, a type of bearish transition, but I would need that transition to occur, because if we look internally, right, unlike EU and GU, we haven't seen a full-on bearish transition, right? We have, let me actually delete a bunch of this stuff here. Okay, so from our minor intraday, we have low, high, low, high, low, high from our intraday structure. So we are still bullish per se. And although we have, you know, this is the first time we are seeing a substantial break of the immediate structure, sorry, right? Whereas every time we've broken immediate structure, right, it's only been sudden. Whereas this time the immediate structure was broken and it was substantially brought down. So we are essentially at a breaking point right now on whether we are going to transition now or we're going to continue that bullish momentum, that bullish intraday structure. So as you can see, the wick is holding this down. So it's now a matter of whether we're going to sustain above, you know, that liquidity point, or we are going to continue higher. So I would like to see a bit higher. I mean, it makes a lot of sense in my opinion, if we were to come into the inefficiency and then see a transition. But keep in mind, this is a big move. So this transition will take time, just like the EU-GU move. Right, we're analyzing this on a 15-minute. You know, this is a very, very big move per se. This is, you know, 43 pips. But by a big move, I don't necessarily mean distance, I mean time. So this move took 3 hours to break, 5 hours to give you that transition. I mean, to give you the pullback, I'm sorry. And it even gave a relative hour or so to give you that entry, which is a bit, you know, when we're looking at intraday scalp trades, you usually have minutes max to get that entry. If not, you miss the whole trade unless you catch a continuation. Whereas here, these transitions are actually taking their time, which gives you, you know, a lot of time to not only think, but to follow your rules correctly. But yeah, with AU, just the same thing here. These impulses, 16 hours. Another impulse, 10 hours. These moves are taking their time. So these transitions will also take their time as well. So it's not always a matter of distance, it's a matter of time as well. Keep in mind the only two dimensions that are clear cut when looking at this chart is your price and your time. All right. So with that being said, I will leave you guys here until Friday.